There's a 5-step process that will take you from a struggling trader that is driven by emotion and trades recklessly without making any progress to a confident, consistent, and professional trader. Step 1. Avoid big losses. It all starts here, and I've been working closely with hundreds of traders over the years, and I've often seen that taking big losses is the killer number 1 for most struggling traders. Accepting and applying proper risk management should be the top priority for any aspiring trader. Without it, traders don't have the slightest chance of ever becoming profitable. And you don't have to make it too complicated either. There are only 2 rules you have to follow here. First, size every trade consistently. Pick a position sizing level, such as 1% or 2% of your account per trade, and then apply it religiously. Never deviate. And number 2, use a stop loss with every trade. Without a stop loss, it is impossible to size a trade. And having a stop loss protects you from situations when your emotions want to take over. A trader who can master those 2 principles has a much higher chance of making it. Step number 2, rules. Every trader always talks about achieving consistent trading results, but there's one thing all of them are missing. Most traders have the idea that they just find a trading strategy that gives them consistent results and then they will settle for that strategy. But it's exactly the other way around. You first have to settle on a trading strategy, learn the rules, apply them consistently, and then you will realize consistent results. To achieve consistent trading results, it is absolutely necessary that you apply consistent trading rules to every single trade. Consistency starts with your trading behavior. So go over your 10 best trades, write down what they have in common, create trading rules for your entries, but also for your exit, for your trade management, for your stop placement and the target placements. Most traders stop at their entry rules and obsess about them. A trade is more than an entry. If you often feel lost during a trade, you trade emotionally, react impulsively, you have no confidence, take a look at your trading approach. From what I've seen working with traders, such traders usually have an incomplete trading approach, and the lack of confidence comes from not knowing what to do after the entry. They spend all their time and energy obsessing about the entry, but they forget the rest. And without consistency in your trading decisions, you will jump around and trade emotionally. What else would you expect? And I probably don't have to tell you that this leads to bad trading performance, stress, and a lot of frustrations. So sit down, clarify your trading rules, and create a complete trading strategy. Step number 3, develop discipline. Having a complete trading strategy and solid rules for all aspects of the trade is an important step, but it does not end there. Next, traders must develop the discipline and the mental strength to stick to their trading rules. It is easy to talk yourself into breaking your trading rules, and your mind can always make it sound reasonable. How often have you told yourself the following? If you don't act now and get in earlier than you normally would, then the trade will take off without you. It's okay to act on FOMO. Or, if you risk more than your regular position sizing rule says, you can potentially make a fortune on this trade. This trade seems too good to fail anyway, right? Or, you should take off your stop loss this time, as the price is already dangerously close to my stop loss. The price has to turn around eventually, right? Or, the price is only halfway towards your target, but you don't want to give back profits. It's better to get out now, and although you cut your winner short, it's better than ending up with nothing, right? Or, the guy on Twitter said I should buy, and he sounds pretty sure. I know it has nothing to do with my trading strategy, but I don't want to be left behind. You can have the best trading rules in the world, but if you are not able to execute the rules and constantly find yourself in a position where you end up breaking your rules, you will not make money. Discipline is what holds everything together, and therefore it is important to work on that skill. Step 4, confidence. This is where confidence comes in. Traders who lack confidence in themselves and their trading strategy won't be able to execute their strategy, and who would blame them? Having trust and confidence when dealing with the unknown of your new trading strategy, while also fully knowing that you yourself as a newbie trader have no proper skills, would be unnatural, and you would be delusional. Confidence is built over time. By putting in the time, doing the work, and challenging your trading strategy. The fastest way to develop confidence in your trading strategy is through proper backtesting. Before taking a live trade, you must spend dozens of hours backtesting your trading rules. Apply them across different markets, time frames, and time periods to learn about their robustness. Collect as much information about the backtest performance as you can. Also, save a screenshot of every trade you take during the backtest. This way, you not only train your pattern recognition and you become better at executing your trades, but you also see how your trading strategy would have performed. Positive and profitable backtest results can give you the initial confidence to stick to your trading rules. And step 5, expectation management. Trading profitably is all about playing the long game and having a long-term approach. This is where expectation management and having proper trading goals come in. Although it is great to be motivated and shoot for the moon, having unrealistically high expectations usually has the exact opposite effect. Once you realize that you won't be able to achieve any of your great trading goals anytime soon, frustration often sets in quickly. What I have found to be a much better and more realistic approach is to break down your overall trading goal into smaller sub-goals, which you can reach in a foreseeable future. So instead of trying to flip a $100 account into a $500,000 account, although you have never even had a profitable quarter or months, start with something you believe you can do. For example, try not to break your trading rules for the next 30 days. Set yourself a goal of applying a 1% position size to all of your trades for the next month. Other process-oriented goals could include sticking to your backtesting routine or ensuring that every trade that you have taken is fully journaled in your trading journal, hopefully Edgewonk. Realizing such goals won't take long and you can show yourself that you can achieve what you set out to do. Such an approach creates confidence and a positive trading environment overall. Every month, set yourself a new and achievable goal, and by the end of the year, you will have completely transformed your trading. And this is the 5-step process that will take you from an impulsive losing trader to a confident trader that has a much higher chance of achieving their goals.